Trump has just confirmed his meeting with Xi Jinping after months of tension, and within minutes, Bitcoin and the altcoins moved higher. Coincidence? Unlikely. Every move seems meticulously calculated. In this video, we'll analyze the charts for Bitcoin and Ripple XRP. But while the United States and China play their geopolitical chess match, Japan is charting its own course. Regulated stablecoins, banks ready to operate with Bitcoin, and a reform that could completely change the rules of the financial game. And as if that weren't enough, Visa is stepping into DeFi. It looks like global markets are turning their gaze back to international politics. Donald Trump confirmed he will meet with Chinese President Xi Jinping during the APEC summit, to be held on October 31 in Seoul. The news arrives amid heightened tension between the United States and China, marked by new tariffs and, notably, a sharp decline in the cryptocurrency market. Trump, however, struck a conciliatory tone. He said he has deep respect for Xi Jinping, whom he considers a very strong leader, and he stated that he's seeking a fair trade deal with China. That shift in tone was enough to spark an immediate reaction in the markets. Bitcoin climbed about 2%, while Ethereum, BNB, and Solana rebounded between 3 and 4%. This immediate positive reaction may be giving us clues about what major institutions are planning. Let's not forget that last Black Friday's catalyst was the opposite announcement, the cancellation of the meeting between Trump and Xi Jinping. Meanwhile, in Asia, Japan continues to cement its role as one of the most active countries in integrating digital finance. Mitsubishi UFJ, Sumitomo Mitsui, and Mitsuo are preparing to launch a yen-pegged stablecoin to modernize intercompany payments and reduce transaction costs. The project is built on Procomat, a platform developed by MUFG that allows digital currencies to be issued on multiple blockchains like Ethereum or Polygon, while remaining under banking regulation. Mitsubishi Corp will be the first to test it for internal payments and international operations. In addition, Binance Japan has partnered with MUFG Trust Bank to explore this same infrastructure, showing the Japanese financial system's growing interest in stablecoins. And it's not the only thing moving at Japan. Japan's Financial Services Agency is preparing a landmark regulatory review that could allow banks to invest directly into cryptocurrencies like Bitcoin. Until now, that's been off limits because of volatility. But the new proposal aims to put crypto on the same footing as traditional assets, like stocks or government bonds. If the reform moves forward, banks could hold cryptocurrencies under strict conditions and even register as regulated exchanges to offer trading and custody. This lines up with the push major banks are already making into stablecoins. Everything suggests Japan wants to fully integrate blockchain technology into its financial system, but within a solid, tightly controlled legal framework. In fact, the Securities and Exchange Surveillance Commission is also drafting new rules against insider trading in crypto, strengthening transparency in a market that already exceeds 12 million registered accounts in the country. On another front in the global financial ecosystem, Visa is taking another step toward convergence between the traditional system and the crypto world. After adding support for stablecoins and cross-border transactions, the company is now looking at the decentralized lending market, better known as DeFi, a sector that already moves more than $670 billion. The idea is to leverage blockchain infrastructure and smart contracts to offer loans backed by crypto assets without intermediaries and with automated risk management. Visa will collaborate with protocols like Morpho, used by Coinbase, and with the French bank Société Générale, as well as projects like Yuma Finance and EtherFi, which are taking on-chain lending into real-world use cases, even linked to Visa cards. While the United States and China search for a balance in their trade relationship, Japan is moving toward the full digitization of its financial system, and companies like Visa are pushing the boundaries of traditional credit into the DeFi universe. Everything suggests that the next major financial transformation won't come only from banks or governments, but from the increasingly tight connection between the traditional economy and the crypto ecosystem. In our latest Crypto Insight video, we analyzed that the crypto market was likely to face a bearish climactic move before beginning an upward recovery, since the overall context looks like a macro range we're betting on. In truth, it's a bullish accumulation process. Here's how we explain it. Here's what I've been analyzing. We're in a range. In my view, an accumulation process is taking shape because there's no doubt institutions injected heavy buying here. That's why I believe price will keep accumulating. In fact, I expect a deceptive bearish climactic move before a recovery that eventually pushes higher. But if we zoom into the short term and look at what's happening right now, what are retail traders doing? Look, retail is buying like crazy. And what has price done? The opposite. It's been falling. Why? Because retail has no idea. That's how it is, unfortunately. And that's exactly why our work at Crypto Insight is to give retail investors access to advanced, rigorous technical analysis so they don't fall into the trap you're seeing here, the one that seems to catch them every time. What does that lead us to think? If retail is piling in, wouldn't you want to see a bearish climactic flush to liquidate all those long positions in the short term, and once they're wiped out, see price move higher since, broadly speaking, the retail crowd then ends up selling? Correctly reading what the big institutions are plotting is a real advantage for our technical analysis. It's what lets us study and weigh events like an aggressive climactic move, in this case bearish, before the recovery you're seeing. Now I'm going to share what the major players are doing, and on the other side what retail is doing, so you don't end up on the wrong side of the trade. I'll explain it all, but first,
welcome to Crypto Insight, your ethical and moral channel for cryptocurrency technical analysis. Here, we really know what we're talking about. We conduct advanced technical analysis that has been developed for over 12 years. We upload videos several times a week. If you're enjoying what you're seeing, let me know and leave a comment with your opinion. Like the video, subscribe to the channel, and click on the bell so you don't miss the next opportunity.
Bitcoin's climactic move has honestly been very aggressive. I'm paying very close attention to the 109,750 price level. If we see Bitcoin unable to break this structure to the downside, the message is that strong hands are expecting very high bullish volatility in the markets almost immediately. That's why it will be crucial to follow the structure closely. If the downside doesn't give way, we can expect explosive upside moves. Now, take a look at what retail investors are doing. As you'll remember from previous videos, retail was in a buying phase at the worst possible moment, precisely when Bitcoin was more likely to do the opposite and drop. It's a clear example of how the retail investor keeps getting it wrong, and that's exactly why you want to be on the other side of that trade. For this reason, and based on deeper analyses that are even more essential than what I'm showing on screen, we already anticipated that a bearish climactic move still had to play out in Bitcoin's price. Well, we've now had the bearish climax we were expecting at Crypto Insight. So, what can we look for next in BTC? On the one hand, we're seeing retail start to sell Bitcoin, again, just as price is moving higher. As I keep saying, retail tends to do the exact opposite of what should be done. And what are we seeing in the delta between whale buying and retail buying? We're seeing that in contrast to retail, whales are buying. Right here on Bitcoin's price is where that buying kicked in. All signs suggest this bullish push is being driven by major institutions. And hey, at a moment when retail is selling, we might want to be on the right side of the trade. Back on the classic Bitcoin chart, our broader expectation is a bullish accumulation phase. In the short term, as long as we respect this key defense line, there's room for a major upside eruption. And if we jump the creek, don't even get me started. But whether we get that initial reaction or not, it wouldn't be the end of the world. Institutions may want more time to accumulate before starting the next leg up. Still, everything points to momentum building. We see it through cross-analysis with other altcoins and with MicroStrategy, for example, a fantastic proxy. We'll get to Ripple XRP in a moment, but first, let's look at Ethereum, because it's very interesting to cross that analysis with Bitcoin. Here we have the climactic move we've just experienced, the one we were betting on in the last Crypto Insight video. Notice how after the bearish climactic move, price quickly resumed its upward path. And, of course, right on cue, the big headline drop. Donald Trump and Xi Jinping are finally going to meet and tensions are easing. That was, as you know, our major call at Crypto Insight. In my view, the average investor, thinking more like the institutions, no longer believed a renewed tariff war was coming. But hey, time will tell how that meeting goes. For now, the thesis is working well. For me, this Ethereum structure is key. Just look at this wick from a very important candle. It let us work an exquisite alpha angle. What a wild structure. This level to me sets the tone. As soon as we get a black swan move into that structure, we can stay positive. Is that what we're going to see? That's the million-dollar question. And frankly, yes, that's the scenario we're leaning toward. Now, if we look at what the average retail investor is doing, they're selling again. They started selling at the worst possible moment. Retail began selling here and has kept selling all the way up. And I'd like to think that if you watch Crypto Insight regularly, you won't want to be or prioritize being on the retail side. And now we're going to analyze Ripple XRP, which is the best proxy to understand what's likely to happen in the crypto markets over the short and medium term, because its price action is an open book. But before we dive into the XRP analysis,
I want to introduce you to our private Telegram channel, which is completely free. In fact, at the time of recording this video, we're also live streaming for the community. During these live sessions, we look for trading opportunities in the futures market. We focus on intraday trades, and within this community, members also share their operational ideas, what they're working on, and what they're looking for in the markets at any given moment. It's honestly very interesting. This community is constantly learning and improving. So if you're an active trader and tired of trading alone, you can join our community. It's very simple. The requirements are as follows. You need to be a user of BitUnix or BuyDFI, have deposited cryptocurrencies into your BitUnix or BuyDFI accounts with a minimum value value of $100.00 and use this account as your primary futures trading account. In other words, you need to be actively trading. Once you've met these requirements, simply fill out the form displayed on the screen. It consists of just 5 simple questions, and we'll get back to you as soon as possible. I'm leaving you the BitUnix promo details and the Crypto Insight Premium Access form in the description and pinned comment of this video.
During the massive XRP drop that hit all crypto assets last Black Friday, notice how the candle close caught our attention. That's key. It's no coincidence that shortly after, XRP respected that structure. That's why we've treated, and for some time now have been working with, it as a key defense zone. Thanks to our cross-analysis, when price was around this area, we kept telling you we expected a climactic move below that defense zone, followed by a recovery and an upward turn. Take a look at what we said about Ripple in our last video. From my perspective, the picture is clear. With Ripple, we can expect exactly the same as with Bitcoin and Ethereum. They come in, they scare the market. Why not something like that? A quick jolt, a little trap. People start thinking crypto is going down the drain. That's the point where XRP, Ripple for short, can recover. So, what could the next bullish leg offer? What do we expect? It's essential to understand we're coming off a market trap, exactly what we were anticipating. That suggests retail traders are now trapped short, and if retail is trapped short, it's reasonable to think institutions prefer longs, even more so when price keeps respecting the structure the way it has. Here we identified a creek. We can see the creek has already been broken, so what would be ideal? Just like I said with Bitcoin, XRP, Ripple for short, still has room to dip, but if it respects this structure, or even pokes a bit lower as a trap without truly breaking down, the bullish breakout in XRP and across crypto could be compelling. See how all these analyses line up? On XRP, retail is selling, while the delta of whale buys versus retail buys is rising, signaling whales have started to accumulate. Now tell me, what do you expect from the crypto market? Are you bullish or bearish? Drop your take in the comments. And if you found this advanced technical analysis valuable, content you won't find on any other YouTube channel, support us by liking the video, subscribing, and clicking the bell so YouTube helps us grow. And of course, share this with friends, family, and other trading and crypto communities. Good luck with your trading, and I'll see you in the next one.